Facebook's Q1 numbers came in and the stock is popping in the after hours, up over 13%. We'll dive into the numbers on today's show. We'll take a look at the revenue. We'll also take a look at the revenue trends over at Facebook. Some really interesting stuff here. You're definitely going to want to stick around for that. We'll dive into these numbers. We'll take a look at the revenues, the profits, the guidance. We'll take a look at the all-important investment that they're making into the metaverse and how that's impacting this company. And then we got to come over here and look at this from a technical perspective. As the day closed, the stock was down at about $175 per share. Now it's up closer to $200 per share. Does this mean it's the bottom for Facebook? Is this the bottom? Is a new uptrend starting with these shares? We'll talk about that from a technical perspective here in a moment. Now, year to date, though, Facebook stock is still getting blasted, down 48%. We should have some reprieve heading into tomorrow, as in the after hours, the stock is up about 13%. It's bouncing around. That's on the heels of going down about 3% during the regular trade. So all in all, you're looking at about an 8 to 9% move in the after hours for Facebook over the last 24 hours of trade, heading into these critical Q1 numbers, which came in at $27.9 billion. That was just 6.6% year-over-year revenue growth, and that actually missed expectations by about $310 million. I think the fact that this stock is going up in the after hours just showed you how disastrous people thought this report was potentially going to be for Facebook. Not only that, from a technical perspective, the stock is probably a little oversold. Now, from a monthly active user, daily active user, you're seeing basically similar type results to that revenue growth. If they grow their monthly active users by 5 or 6%, well, their revenue tends to go up about that much as well, considering how mature Facebook's product is and, quite frankly, how well the company is run. Now, what people have been really keeping an eye on with Facebook is really two things. Number one, they really decided to boost up their investment into the Oculus, the metaverse, and those types of things. Well, they were projecting, the prior outlook was closer to $90 to $95 billion. This is total expenses for the year. So roughly a 20 some odd billion dollar run rate per quarter on those expenses. They've reined that in over the last couple of quarters. I think as they've seen the stock pull back and the performance of the stock, the management's doing a smart thing over at Facebook. They've reined in their guidance to $87 to $92 billion. My guess is you'll probably be smack dab in the middle of about $90 billion on those expense side when it comes to Facebook. Now, probably the most important thing that I want to make you understand here as an investor is there's a couple of things going on in the online advertising space. I mean, first of all, you got the pandemic, you've got a war in Russia, you've got some things going on, but I think the biggest thing is this iOS change. Now, not getting into the big minutia of it, this happened in Q2 of 2021. Apple rolled out privacy changes on their iOS app that makes it hard for companies like Facebook that want to show you targeted ads, wants to know what websites you've been, want to know what apps you've downloaded on your phone. They used to have free reign of that. Well, Apple reined that in and basically made it impossible to track you in that sense in Q2 of 2021. Now, it takes a little while for people to update their phones. Not only that, it takes a while for online advertisers to kind of update their budgets, okay? It takes them a while to figure these things out. So Q2, not necessarily the greatest proxy when it comes to initial iOS changes, but I want to show you that this company had $29.1 billion worth of revenue, and that $29 billion worth of revenue is a key figure because I'll show you why. In Q3, iOS changes had been rolled out. Advertisers were probably made aware of that. They started making adjustments to their budgets. And again, we could not get over $29 billion worth of revenue in a quarter. Now, you might note that Q4, you were way over $29 billion. In fact, you were up over $33.6 billion. This is revenue quarter over quarter over at Facebook. In Q4, you would expect advertisers to make kind of a bazooka approach or a machine gun approach where they just kind of splatter ads all over the place and they don't necessarily care about ROI. You would expect Q4 ad spending to go up, and it did, up to $33 billion. That's great. But the number I've been watching since Q2 of last year is $29 billion. Can Facebook produce a quarter outside of the fourth quarter, which is great for any type of advertising, especially online advertising? Can Facebook produce a quarter after the iOS changes that produces more than $29 billion worth of revenue. And in Q1, we just got those results. I told you they were $27.9 billion. That actually missed expectations by $310 million. The street was expecting $28.2 billion. So they not only missed estimates, they missed this $29 billion mark. And then they gave us guidance for the upcoming quarter in Q2. The estimates were over $30 billion, and the guidance is coming in south of that from $28 to $30 billion. So in the shorter term, these iOS changes has put a cap on Facebook's ability to generate more than $29 billion in a quarter on a revenue perspective, minus the fourth quarter. So you better believe when Q3 rolls around, we have estimates in at 32 billion, and then Q4, look, can they get all the way up to 39 billion? When in a normal quarter, you're doing south of 29 billion, in the most recent quarter, south of 28 billion in revenue. This company is still facing challenges when it comes to this iOS change. Their revenue from a growth perspective outside the fourth quarter has actually gone flat. So you have to factor that in. When we talk about a price to earnings, we talk about a price to sales, and we talk about the fact that expenses are expected to balloon this year. You have to factor that into your valuation when it comes to Facebook. I actually published a video on this shortly after Facebook's last earnings, where people were making a lot of arguments about the price to earnings. This was when the stock was closer to $240 per share. I said there's going to be a lot of re-rating of these stocks as analysts start to realize this company has a ceiling on its earnings, and right now it appears right at $29 billion. And on top of that, I'll show you here in a second that their costs are continuing to balloon, essentially bringing in earnings, which obviously brings down your price to earnings multiple. Now, moving on to the financials, we got our revenue. We talked about how we had $27.9 billion. On a quarterly basis a year ago, we were sitting at $26 billion. I can't tell you how fascinating it is that the fact that this company cannot print a quarter over $29 billion outside of a fourth quarter where online advertising spend just basically goes through the roof. Now, total costs and expenses on your R&D side, your marketing and sales, your general administrative, and your cost of revenues are ballooning. Look at this. It went from $14.8 billion all the way up to $19.3 billion. So despite the relatively mediocre revenue growth of about 6%, your income from operations actually declined. You went down from 11.3 all the way down to about $8.5 billion. You flow through some income taxes and you get down to a net income of $7.4 billion. In the previous quarter, on a yearly basis, you had $9.5 billion worth of net income. Again, that's down over $2 billion year over year. That is why I spent so much time at the beginning of the video showing you why I'm a little concerned this company still can't guide or print a quarter over $29 billion, because what is happening? Our expenses continue to go up. What did they guide on that expense report? They're expecting to do $87 to $92 billion worth of expenses. That's going to accelerate, because if you annualize out $19 billion, you're south of $80 billion in total expenses for the full year. That means the upcoming quarters, we're going to see an acceleration of these costs, and we're not seeing an acceleration of the revenues, both year over year, but quarter over quarter as well. I think we could almost exclusively pin that to two different things. One, the competition for TikTok, I think, is impacting, but these iOS changes, it's no coincidence that since this iOS change has been made, we have not been able to bust up over that $30 billion mark, except outside of a fourth quarter. Now, they have been reducing that number of shares outstanding over at Facebook. It has helped keep EPS a little bit higher. You see here, the number of shares outstanding here has gone down year over year. They talked about how they continue to do buybacks. We'll see evidence of that when we get to cash flows. Now, in terms of their balance sheet, still a very, very financially healthy company, and one you really don't have to worry about from a financial perspective, okay? They've got well over $40 billion worth of cash. They've got plenty in receivables. financials. They have basically they have no debt. They have almost no liabilities outside of kind of a lease obligation and maybe some accrued expenses. This company is incredibly financially secure. That's why we give this company a lot of rope from a financial perspective, because from a balance sheet perspective, there's literally nothing to worry about when it comes to this company. Now, from a cash flow perspective, again, we talked about how last year on a quarterly basis, you had $9.5 billion worth of revenue. That went down $2 billion year over year. Again, imagine if we print another quarter where we go down another $2 billion on that net income side. That's why you have to factor this in when you come here to a site like Seeking Alpha and you're like, oh, well, Facebook's PE is only 14.9. That seems pretty low. I'm going to buy it. Well, factor in, okay, that these estimates are likely to still come down. And Facebook's business, its core business, is really under pressure. At the same time, when they're scaling up expenses, these earnings are going to continue to come in. So while the PE, I would argue, is low in the 14, 15 range, well, after the estimates come in the upcoming quarters, well, that could quite frankly go up quite a bit. So you're not getting a smoking hot deal as I think it appears on the surface with this type of site. But from a cash flow perspective, after you add back in depreciation, stock-based compensation, and your accounts receivable line, well, hello, $14 billion worth of positive cash flow on a company that's worth $500 billion. Well, yeah, on a quarterly basis, that's fantastic. Last year, you're sitting at 12.2. So despite the declines in net income, which again hurts your EPS side outside of a buyback, you do have increasing cash flows at that company. And again, there's a lot of investors that will value this company based on those cash flows, and they still look incredibly impressive. And quite frankly, we probably continue to see that over at Facebook. Now, they did repurchase $9.5 billion worth of stock. I tell you what, when your stock goes like this over the course of a couple months, well, using that buyback probably a good use of some of that cash. But the last thing that I wanted to show you was down here buried in the financials. We see here our revenue, and we focus on this Reality Labs because this is kind of the upcoming metaverse, or essentially the future of the company, if you believe management. In the most recent quarter, just $695 million worth of revenue. In the previous period, you were at $534. Again, the advertising business is well north of a $25, $26, $27 billion business. That Reality Labs business, just $695 million. But look how the costs are starting to bloom. Here's your income from operations. Look at Reality Labs. Last year, you lost $1.8 billion. We'll add another $1.1 billion to that year over year. Now you lost $2.9 billion. So you're investing nearly $3 billion a quarter in a business segment that is generating just $695 million. Obviously, the bull case argument with Facebook is this $3 billion run rate on those expenses, which is quite frankly likely just to continue to go up. That will help this company turn the corner at some point and grow their business, because we're seeing that their core business has essentially stalled out from a revenue growth perspective. And whether or not they're able to pull levers in the future that get around these iOS changes or create new ad formats, and certainly the competition from TikTok is weighing on all these types of things. And you obviously see from the total income from operations, you went from 11.3 down to 8.5, again, primarily due to the fact that your income from operations was negatively impacted by increasing cost in Reality Labs and a decline in income from operations from your core business, despite a little bit of revenue growth as well. All those things should weigh on you as a shareholder, but in the shorter term, it's making a very nice bounce today. And so Facebook was down here at about $175 per share. It's popped up here to about $200 per share. I would not get rather excited yet, because right now with Facebook, it looks like to me, since the initial drop after last earnings, it looks like all you want to do with the stock is start this downward channel. So this upper channel is still intact. The downward channel is still intact. We made a set of highs here, a low here at 188. It bounced to 232, did not increase it over the previous highs. We bottomed out below the previous sets of lows here, down here at 172. And now, yes, we are bouncing back. And I quite frankly would expect the momentum in in this stock to continue to bounce back, potentially all the way back up over $200 per share before meeting some resistance. There's actually two areas of resistance that I would be concerned about from a technical perspective. You have an area right here at $220 per share. The stock would more than likely hit its head on that and then begin its pullback. And then on its way back, if it breaches back below the lows that we made just earlier today at about $173 per share, well, I tell you what, you'd get south of that, and that would essentially confirm that this downward channel is simply intact with Facebook. And until Facebook is able to burst out of this kind of downward channel that it's making right now, I wouldn't necessarily be convinced that this stock's downward trend is over. There's a lot of arguments that could be made that Facebook is undervalued for the future, but I outlined on today's show, this company is still having difficulty with their core business, eclipsing a $29 billion quarter after the iOS changes, and we did not see that in this quarter, and they're guiding basically under that as well. I'm worried about the Q3, which has estimates at $32 billion. My guess in the coming days, those estimates are going to come down on that. As those estimates come down, coupled by a 14% pop by this stock in the after hours, is probably going to mean the multiple, while it's still quote unquote cheap, you start looking at other online advertising stocks like a Google and maybe even like an Amazon, and it doesn't look that cheap in comparison. So I'm not convinced these numbers take Facebook out of the woods. In fact, it simply just confirms to me that this company is seeing massive challenges in its core business. If you are looking past that and you're already looking to Reality Labs and the metaverse, well, currently that business model is making just $695 million and losing nearly $3 billion a quarter for a $500 billion business. That simply just is not going to cut it. I think the push-pull on Meta or Facebook is going to continue in the future. Quite frankly, if you have shares in these and you want to take profits as we get north of $200 per share, I certainly wouldn't blame you. From a technical perspective, it doesn't look like the worst is over with Facebook. And until this company can prove to me that on a quarterly basis, it can print over $30 billion, this would just simply be a shorter term investment, as the swings, as you see in the after hours, up 14%, can be wild and wildly profitable if you want to trade this name. But from a longer term investment, I think there's too many questions that have left to be unanswered, and we'll wait until more clarity to really recommend this from a longer term perspective. That was Facebook. Hopefully you guys enjoyed today's video. Let me know what you think down in the comments. Good luck with your investments.